What's up, guys? My name's Curtis, and welcome to 5 Minute Finance, where I take personal finance topics and explain them to you in 5 minutes or less. In one of my recent videos, I got a comment asking what I mean when I say you should be investing your money. And seeing as I talk a lot about why you should be investing, I thought it would be a good idea for me to explain what I mean when I say you should invest. The definition of invest is to expand money with the expectation of achieving a profit or material result. So investing can span a large range of things, from buying stocks that you hope will go up in value over time to paying for a college degree that you think will increase your income in the future. Before I talk about what I'm usually referring to when I say you should be investing your money, I wanted to explain why investing is so important. You could be the best saver in the world, but if you don't invest your money, it can be very difficult to build up your nest egg over time. This is because of inflation. Every year, the value of the dollar decreases and the general price of things increases. The average annual inflation rate is usually around 2 to 3% each year. That means for the money that's sitting in your bank or the cash that's in your nightstand, it's losing 2 to 3% of its value every single year. It's for this reason that we need to invest. We want our assets to grow over time, not shrink. So, in previous videos when I talk about investing, I'm usually talking about stocks and bonds. I'm not trying to say that stocks and bonds are the only thing that you can invest in. There are plenty of things that you can put your money into that will appreciate over time and sometimes generate cash flow. Real estate is one great example of this. I tend to focus on stocks and bonds, especially for beginner investors, because they provide good returns over the long haul. Also, they are very easy to get invested in. When it comes to investing in stocks and bonds, you have a few different options. Your employer-sponsored retirement plan, such as a 401k, you have the individual retirement account, or IRA, and you also have taxable brokerage accounts. I'd always recommend starting with the 401k if you have the option, because most employer-sponsored retirement plans have some sort of company match associated with them. So every single dollar that you put into that account each month, your employer is matching a certain percentage of it. Even if you're young and you're currently working for a company that you don't see yourself staying with long term, it's always a good option to invest in your 401k because you can always roll that 401k balance to your new employer if you do switch jobs. So if you have the option, contribute to a 401k no matter your age, especially if you get that employer match. If you don't have the option to invest in a 401k, your next best option is an IRA, and I personally prefer Roth IRAs. You can open an IRA through companies like Vanguard, Fidelity, Schwab, Betterment, SoFi. There are a plethora of different options, and most of these companies allow you to open the IRA for free online. So you can do a little bit of research and choose the best company that seems to fit your needs. My wife and I personally use Vanguard for our IRAs. Now, I would say you should first invest in a retirement account such as the 401k or IRA due to the tax benefits that's associated with them. But if you max those accounts out, you can always open a taxable brokerage account. Just about anywhere that you could open an IRA, you could open a taxable brokerage account, which would allow you to buy and sell stocks and bonds. Regardless of what type of account you're investing in, the best investment when you're just starting out would be index funds and target date retirement funds. Index funds are comprised of hundreds of different stocks and aim to match the performance of some of the most common stock indices, such as the S&P 500. I do have a video on this if you're interested. If you're curious, the average return of the S&P 500, if you adjust for inflation and assuming you're reinvesting your dividends, is about 7% per year. Gaining 7% per year on your money is much better than losing 2 to 3% per year due to inflation if your money's just sitting in a bank. I also have a video on target date retirement funds, and these are funds that gradually shift from being very heavy in stocks to being more heavily invested in bonds as you get closer to retirement. This just means that the closer you get to needing your money, your portfolio is going to become less risky. So, what do I mean when I say that you should be investing your money? Start with a 401k or an IRA, and if you max those out, feel free to open a taxable brokerage account. Invest in index funds or target date retirement funds within those accounts. And as you get more comfortable with investing, you can branch out to things like real estate, single stocks, or other types of investments. I hope this video helps explain what I mean when I say things like, what if you invested that monthly car payment instead? Or, do you really need that latte? Maybe you should invest that money instead. If you guys enjoyed this video, it would really help me out if you gave it a thumbs up. And if you're new around here, consider subscribing and hit that notification bell for more videos in the future.